Subscribe to LearnCab and hit the bell icon to get notified.
Hello friends, welcome to the amendment lecture on GST for CA Intermediate for November 2022 examinations. Friends, the amendments from 1st of November 2021 till 30th of April 2022. The amendments through Act, the amendments in the rules, the amendments in the notifications, various clarifications which have come in the form of circulars. All of them have been discussed. Friends, the length of this lecture on amendments is hardly going to be about 1 hour and 15 minutes. During this short duration, I wish you a very happy learning. Friends, before we proceed further, the exclusions which are there from the syllabus. Schedule 3, neither a supply of goods nor a supply of services. It has got 8 paragraphs. Para number 7 and para number 8 is not a part of your syllabus. Reverse charge mechanism. Friends, services which are notified, goods or services which are notified under 9 subsection 3. Amongst these, services which are notified are a part of your syllabus. Even amongst the services which are being notified, those services which are notified under IGST Act are not a part of your syllabus. Only those services which are notified under the CGST Act are a part of your syllabus. Services which are notified under 9 subsection 5. Friends, according to 9 subsection 5, when notified services are supplied through an electronic commerce operator, the electronic commerce operator is supposed to pay the entire GST liability. Now friends, this concept, if you remember, it is sufficient. You need not remember which services are notified under 9 subsection 5. As a matter of information, 4 services have been notified under 9 subsection 5. You need not remember, or you need not, those 4 services are not a part of your syllabus. All that you need to know is only the concept of 9 subsection 5. Rule 42 and Rule 43. So the proportionate input tax credit calculations, wherever input tax credit which is commonly used for business and non-business, commonly used for making taxable as well as exempt supplies, proportionate input tax credit is only eligible. The methodology of calculating that proportionate input tax credit is there in Rule 42 and Rule 43. This Rule 42 and Rule 43 is not a part of your syllabus. Friends, relatively, of all the amendments which has happened so far after GST has been introduced, this amendment lectures for November 2022 is the smallest one. It is hardly around 1 hour and 15 minutes. In this 1 hour and 15 minutes, I request your utmost concentration so that it would be beneficial for your examination. I wish you very happy learning. As usual, before starting, for LearnCab students, I would recommend you to watch these lectures. Now friends, whatever lectures which you have already learnt from the LearnCab portal, with those lectures, you please supplement those lectures along with these amendment lectures. So you'll be saving a lot of time. So I do request you that whatever lectures which you have already watched, please do supplement those lectures along with these amendment lectures. The amendments are very few. So I request you, it is rather mandatory for LearnCab students to watch these amendments. Amendment notes are attached. You can please download them. Approach. As usual friends, we are going to discuss only about the change aspect. Of course, we will be discussing the background, why this change is required and what is the implication after this change. So you are expected to know the basics to understand the change in a better manner. Now friends, those students who have been asking about the books, there are various books which are available at the description which is being provided over here. You have an SRK module which is your comprehensive text. It has been co-authored by me along with CA Praveen Jain. Then you have QR infographics, which is quick revision infographics, your revision material which is available. Then you have a question bank in the form of Train Your Brain. All of these hard copies and soft copies can be ordered for those who require at the description which is mentioned over here. Well, as usual, before we start, friends, LearnCab students, you have to mandatorily watch these lectures. All these provisions which we are going to discuss, you will not be finding them in these lectures which you are already watching them in the portal. For the reason that these amendments are very minimum, so therefore these are discussed as a separate lecture in itself. So friends, LearnCab students, whatever lectures which you have already studied from the portal, please do supplement those lectures with these amendment lectures. It is mandatory for you to study these amendment lectures. The amendments are very few, they are very simple. You will be easily in a position to understand them and master them. Amendment notes are attached. You can have a look at it. Approach, of course, I'm sure you by now you are already thorough with the basics. So the approach which we are going to have is we are going to discuss the change aspect. We are going to discuss what was the scenario prior to change, why the change was required, and what is the change which has come. Friends, if any of you all want to order the books, there are 3 types of books which are available. One is SRK, it is a comprehensive book on GST. Another one is QR infographics, it is a revisionary material. The third one is question bank. Now friends, please do read the description about these books before you place any order on the books. So the description, the link which is there is available over here for you to place an order. But however friends, against each product, what is the product about, what is the book about, the description has been mentioned against each of the product when you go inside the link. Please do watch and read the description carefully before you place an order. I wish you a very happy learning. The first amendment, friends, in the definition of supply. Friends, supply, as we know, there's actual supply, there's deemed supply. Once a transaction fits into the definition of supply, then we are going to see Schedule 2 would tell you whether it is a supply of goods or a supply of services. Similarly, we also have certain transactions which are neither a supply of goods nor a supply of services. So this is a broad outline of your definition of supply under section 7. You have actual supply, you have deemed supply. Once if it is supply, you could classify it further either as a supply of goods or a supply of services. And there are certain transactions which are neither a supply of goods nor a supply of services. Now friends, what is the change? The change is, it is a very extremely cautious amendment which the government has brought in. Now for this we need to understand a brief basic about service tax law. The issue is something like this. The Supreme Court has delivered a judgment under service tax law stating that service tax cannot be levied for the services which are rendered by a club to its members, for the reason that there is something called as principle of mutuality or doctrine of mutuality, which means that one person cannot make profit out of his own self. Say for example, I take 10 rupees from my one pocket and put it in another pocket. It cannot be called as my income. A person cannot make profit out of his own self. So similarly, unless it is specifically provided that it is going to be a deemed profit or a deemed supply, unless if it is specifically stated in general scenario, in the actual scenario, a person cannot make profit out of his own self. Now considering the judgment of the Supreme Court which stated that the services rendered by a club to its members would not be leviable to service tax for a reason that a person cannot supply services to his own self. Club is nothing but it is a collective pool of all the members. So whatever contributions they make, it is for the common enjoyment of all the members. So therefore, the services by a club to its members are not leviable to service tax because the court does not see two different persons. The club and the members, because of the doctrine of mutuality, are one and the same. Now this judgment was delivered under service tax law. Be it as it may be, when it was delivered under service tax law, what implications does it have under GST? So let us have a brief recap of what are the provisions under GST. If you could recollect the definition of business under section 2 clause 17, which stated that provision of any facilities by a club to its members, by an association to its members, is a business. It was included in the definition of business. Further going, if you could recollect Schedule 2, wherein it was stated that where any unincorporated association is supplying goods to its members, is giving goods to its members, it would deem to be a supply of goods. So essentially the GST law also taxed the provision of any supply of goods or services by a club to its members. However, after this judgment under service tax law in the Calcutta Club's case, the government feared that the same interpretation, the same analogy would be extended even under GST, because what? GST is a replacement of service tax which was there. We had similar provisions in service tax. So fearing this, the government has brought in a retrospective amendment which is effective from 1st of July 2017. Now what is that amendment? The amendment is nothing but the government wants to safeguard itself that the Supreme Court's judgment which is held that the services by a club to its members would not be taxed under service tax law. This analogy, this principle, this ratio should not be applied under the GST law as well. So to safeguard that interest, the government has brought out this amendment. So let's have a look. So this was what we were discussing. Under Schedule 2, we have para number 7, which states that supply of goods by an unincorporated association or a body of persons to a member for cash, deferred payment or valuable consideration shall be supply of goods. This was already there. So now Section 7, the amendment which is brought in. So 7(1)(a), as we all know, it is actual supply, which means any of these transactions which is made for a consideration by a person in the course of furtherance of business shall be a supply. Now what is the government fearing? And if you could recollect, under deemed supply, Schedule 1, under Schedule 1, and friends please understand, just because under Schedule 2, if it is mentioned unincorporated association, if it is giving goods to its members, it would be a supply of goods. Just by mentioning that, it by itself will not be called as a supply, because as we all know, once a transaction should qualify to be called as a supply, either actual or deemed, and only then Schedule 2 would come into place, whether that supply is a supply of goods or a supply of services. So friends, under 7(1)(a, it says all forms of supply which is made for a consideration in the course of furtherance of business. So here the government was trying to fit, the transactions of whenever there is a club which is collecting subscription from its members, it was taxed under 7(1)(a) as an actual supply, which is, it is a transaction which is for a consideration. A club is charging a fees to its members, which is in the course of furtherance of the business of the club. Now, however, friends, after the verdict of the Supreme Court under the service tax law, if the same analogy is applied over here, how would the 7(1)(a) be interpreted? The 7(1)(a) would be interpreted that there is no consideration at all. Why is there no consideration? Because for consideration, there should be two different people. For a consideration, it is a consideration paid by one person to another person. I cannot pay consideration to my own self. Friends, please understand, a supply could be a deemed supply. Let's suppose there is a case of branch transfer. In the case of branch transfer, one branch is transferring goods to another branch. It is a deemed supply because of specific entry which is there in Schedule 1. If that specific entry was not there in Schedule 1, that branch transfer would not have been taxed under GST because there is no consideration which is involved. Assuming even if one branch is paying to another branch, it cannot be called as a consideration because one person cannot pay to his own self. So friends, now the government was fearing that the Supreme Court's verdict in the Calcutta Club's case, which stated that there is a doctrine of mutuality, there is a principle of mutuality. Here there are no two different persons involved. The club and the members are one and the same. That being the case, it is the whatever is the amount which is paid by the members to the club cannot be called as a consideration if the doctrine of mutuality, if that verdict of Supreme Court in the service tax era is again pulled in GST era as well. So friends, to safeguard this, fearing this interpretation not to be taken, the government has introduced an additional clause 7(1)(a). It states that the activities or transactions by a person other than an individual to its members or constituents or vice versa, which means supply either by a club to its members, that club of course should be non-individual, or either by member to a club or vice versa, for cash, deferred payment or other valuable consideration. This will also fit into the definition of supply. This has been specifically included. This clause has been specifically included. So 7(1)(a), the activities or transactions by a person other than an individual, by its members or constituents or vice versa, for cash, deferred payment or other valuable consideration. So what does it cover? So say for example, if there is a housing society, its members are the residents of the housing society. Is it a supply? The answer is yes. Any supply which is made by a non-individual to an individual is going to be a supply because of 7(1)(a). A club to the members of the club also it is going to be a supply because was 71AA. Friends, please understand here there is nothing new which has been introduced. Already these transactions were taxable to supply. These are just safeguarded now by 71AA so that the Supreme Court's judgment in the service tax law is not extended in the GST era. So why was this done? There is an explanation which is introduced. Particularly for 71AA, there is an explanation which is introduced which states that for the purposes of this clause, it is hereby clarified that notwithstanding anything contained in any other law for the time being in force, you can read this as service tax law, notwithstanding anything contained in service tax law or any judgment, you can say that the case of Calcutta Club's case, decree or order of any court, tribunal or authority, the person and its members or constituents shall be deemed to be two separate persons, and the supply of activities or transactions inter se shall be deemed to take place from one such person to another person. So friends, please understand here there is a deeming fiction which is being introduced, but friends, please understand this deeming fiction which we are talking about, states that the non-individual person, that is the club, and its members are deemed to be two different persons. Friends, please understand here this is not an item which is introduced in Schedule 1. Why I am so specific? Because this is not an item which is introduced in Schedule 1, which means that by a member to a club has to be for a consideration. It has to be for a consideration, only then it would fit into 71AA. I read this again for you. The activities or transactions by a person other than an individual to its members or constituents or vice versa for cash, deferred payment or other valuable consideration shall be a supply under 71AA. So friends, consequently, this para number 7 of Schedule 2, which covered only goods, that is supply of goods by an unincorporated association or body of person to its members for cash, deferred payment or valuable consideration shall be a supply of goods. This has been omitted. This has been omitted because now the transaction is already come under 71AA, where it states the activities or transactions. It is in fact covering goods as well as services by a person other than an individual to its members or constituents, but for a consideration, it would be a supply under 71AA. Friends, what is the deeming fiction? The deeming fiction, it doesn't say that even without consideration it would be a supply. Friends, the deeming fiction is consideration has to be there. Then what is the deeming fiction introduced? The deeming fiction is the club and the members would deemed to be two separate persons, notwithstanding anything which is there in any judgment. I am sure you are able to follow this. So now friends, the updated definition of supply as it stands, you have actual supply 71A and you have 71AA. 71AA does not bring anything new. It is only safeguarding the already transaction which was taxed under 71A. It is only a safeguard measure under 71AA. It is not bringing in anything new. And we have kept this under actual supply. We did not take this to deemed supply. We have kept this under actual supply because here this has to be for a consideration. What is the deeming fiction? The deeming fiction is only that the club and the members would be considered as two different persons. That is the only deeming fiction. Otherwise, it has to be for a consideration. So therefore, we have kept it under actual supply. Another thing is it is not bringing anything new. This was even otherwise already taxable under 71A, only to safeguard this transaction not being taxed because of a judgment which was delivered under service tax law. This as an abundant caution, the government has introduced it as a specific clarification having retrospective effect from 1st of July 2017. As far as Aadhaar authentication is concerned, we already seen this whenever a person is applying for registration, Aadhaar authentication was mandatory. However, friends, if a person did not possess an Aadhaar number, or he did possess an Aadhaar number but Aadhaar authentication failed due to some reasons, then in such a case, alternative and viable means were offered to him, which means the physical inspection was being done and only thereafter the registration was being granted. So friends, in a way, when a new registration is being applied, There, even if you did not carry out the Aadhaar authentication, there were some alternative and viable means which were given to you, and then registration was granted to you even if you do not possess an Aadhaar number. But however, friends, there is a new rule which is being introduced, Rule 10B, which states that for these listed activities, Aadhaar authentication is mandatory. You might have got a registration number even without authenticating your Aadhaar. But if any of these three activities are supposed to be carried out, Aadhaar authentication is mandatory. Now, what are these activities? Friends, these activities are where application for revocation of cancellation of registration is being filed. Friends, as we know, cancellation of registration, either the department can initiate it or the registered person himself may make an application for cancellation of registration. When the department initiates the cancellation of registration, this registered person can apply for a revocation of cancellation, which means he wants this registration to be active again. So, in a case where a person wants to make an application for revocation of cancellation, Aadhaar authentication is mandatory. The next one, for filing a refund application in form RFD01 under Rule 89 or a refund application under Rule 96 of IGST which is paid on goods exported out of India. Friends, in simple terms, if you want to make any application for refund, Aadhaar authentication is mandatory. Now friends, what if a person doesn't possess an Aadhaar number? Will he not be able to carry out these activities? Here friends, there is a proviso which is being inserted. But friends, please understand this proviso, this exception which is there. We have to watch it carefully. It doesn't tell you if you do not have an Aadhaar number, no problem, don't authenticate your Aadhaar, we'll give you some other alternative and viable means. Here, an alternative means is being given, but let's have a look at the alternative means. What does it tell? It tells, provided that if Aadhaar number has not been assigned to a person required to undergo the authentication of Aadhaar, then such person shall furnish the following identification documents, namely Aadhaar enrollment ID slip and any of these following documents. Which means what? If you want to carry out any of these activities which is there in 10 capital B, Rule 10B, you have to authenticate your Aadhaar. If you do not have an Aadhaar number, first go and apply for Aadhaar number. You will be getting an enrollment ID slip. You have to furnish that enrollment ID slip. Here, if you do not have an Aadhaar number, alternative and viable means is not bypassing the Aadhaar itself. If you do not have an Aadhaar number, you want to do any of these activities of Rule 10B, first go apply an Aadhaar, get an Aadhaar enrollment ID slip. Along with that ID slip, in the common portal, you submit these documents, which is the bank passbook with photograph or voter ID or passport or driving license. Any of these documents you submit it. Then you will be receiving an Aadhaar number. Once you receive the Aadhaar number, within a period of 30 days, you have to get your Aadhaar authenticated. So this is the alternative means which is given. This alternative means is not bypassing the Aadhaar. Here, you have to make an application for Aadhaar, get the enrollment slip, submit these documents. Thereafter, once Aadhaar number is being allotted to you, within a period of 30 days, you have to get your Aadhaar authenticated. So friends, in simple terms, what it is trying to tell you, Rule 10B, you might have taken registration even without having an Aadhaar number by alternative and viable means through those physical verification process which we have seen in the registration. However, if you want to carry out any of these activities of Rule 10B, you have to get your Aadhaar authenticated. If you do not have an Aadhaar, what you have to do? Go make an application for Aadhaar, get the enrollment ID, submit any of these documents, give it to the common portal. Then once these things are done, which means you gave your Aadhaar enrollment ID, you gave these documents, once these things are done, you will be able to carry out these activities of Rule 10B. Then once you receive the Aadhaar number, within a period of 30 days, you have to undergo authentication of Aadhaar. Now friends, whose Aadhaar needs to be authenticated? Here it tells, in case of a proprietorship firm, it is proprietor. In case of a partnership firm, partner, HUF, Karta. In case of a company, whole-time director, managing director. In case of an association of person, body of individual, society, the members of the managing committee. In case of a trust, the trustees who are there in the board of trustees. And along with all of them, and the authorized signatory has to carry out the Aadhaar authentication. Say for example, in case of a partnership firm, whose Aadhaar needs to be authenticated. It is partner and the authorized signatory. In case of a proprietorship firm, proprietor and the authorized signatory. In case of an HUF, Karta and the authorized signatory. In case of a company, it is MD or whole-time director and the authorized signatory. These persons' Aadhaar authentication needs to be done. Only then the activities which are mentioned in Rule 10B could be carried out. If you do not have an Aadhaar number, go apply for it. Out of those 4 documents, any one document, these 2 things you upload it in the portal, you can carry out those activities. However, once you receive the Aadhaar number, within a period of 30 days, carry out the Aadhaar authentication. The next change is in composition scheme. Now friends, as we all know, a manufacturer of notified goods is not in a position to opt for composition scheme. Neither the composition scheme of section 10(1) and 10(2) nor the special composition scheme of 10 subsection 2A. Now friends, what are those notified goods? Those notified goods so far were ice cream and other edible ice whether or not containing cocoa, pan masala, tobacco and manufactured tobacco substitutes and aerated water. Now friends, this list has been extended. There are few more goods which have been added. A manufacturer of these notified goods also cannot opt for the composition scheme. So these are fly ash bricks, fly ash aggregators and fly ash blocks, bricks of fossil meals or similar siliceous earths, building bricks, earthen or roofing tiles. So friends, a manufacturer of these goods also is not in a position to opt for composition scheme. Now friends, another point to remember is, you remember the special threshold of 40 lakhs which is available, fine. So in those cases, the person who is wanting to opt for this special threshold of that 40 lakh rupees, he should not be a supplier of notified goods. He shouldn't be a supplier of notified goods. Even that list is extended and these items are added. So friends, fly ash bricks, aggregator blocks, till earthen or roofing tiles. A manufacturer of these goods cannot opt for composition scheme. A supplier of these goods cannot opt for the special threshold of 40 lakhs. So this list has been extended in both these places, composition scheme as well as the special threshold of 40 lakh rupees. The next change in input tax credit. Friends, as we all know, input tax credit can be taken only if certain conditions are being satisfied. What are those conditions? The conditions broadly were that you should be in receipt of document, be it tax invoice or debit note or the invoice of input service distributor. You should have received the goods and services. Then your supplier should have paid the taxes to the government either using his admissible credit or through cash. Now friends, wait a moment. The third condition, that the supplier should have paid the taxes. How is the recipient going to know whether the supplier has paid the taxes or not? Of course, the portal should intimate him that against each invoice where the recipient wants to take the credit, whether the supplier has paid the taxes to the government or not, and only then the recipient would be able to ensure that he should be taking the credit or not. Now friends, when the portal has failed to inform the recipient that whether the supplier has paid the taxes or not, there is no ways and means which is available with the recipient wherein he can ensure whether he has satisfied the condition of input tax credit or not. So friends, in a case where the recipient is not able to know because the portal is incapable to inform him whether against each invoice the supplier has paid the taxes or not, this particular condition, payment of tax by the supplier, is practically not being followed. Now friends, since this is practically not being followed because of the inefficiency of the portal to inform the recipient whether the supplier has paid the taxes or not, they had diluted this condition by introduction of a rule called as Rule 36 Sub Rule 4. We are discussing the background of the amendment. They had introduced 36 Sub Rule 4 by diluting this condition. What is this condition saying? That the supplier should have paid the taxes. Now what they have diluted it in 36 Sub Rule 4, they say that the supplier should have filed his GSTR 1 or the details of those invoices, the invoices based on which the recipient wants to take the credit, the supplier should have uploaded, should have filed these details of outward supplies, in his statement of outward supplies, in his GSTR 1, he should have filed it, and it should have been appeared in GSTR 2A of the recipient. This was the rule 36 sub rule 4, which stated so. Now friends, broadly, section says supplier should have paid the taxes. Practically not being followed, rule being introduced diluted the provision of section, stating that supplier should have filed his GSTR 1. Now friends, please understand, supplier by filing his GSTR 1, it cannot be ensured whether he has paid the taxes or not. The supplier might have filed GSTR 1 but not filed 3B, or filed 3B also but did not include this particular invoice in his 3B. So therefore, just by filing GSTR 1 appearing in GSTR 2A, it cannot be said that the supplier has paid the taxes. So 36 sub rule 4 has diluted this condition. Now what is the problem? The problem is 36 sub rule 4 was challenged in the courts. It was challenged in the court, stating that section 16 doesn't stipulate any condition that the supplier should file his GSTR 1, only then the recipient can take the credit. Section 16 tells the supplier should pay the taxes. There is no such condition that the supplier should file his GSTR 1, only then the recipient can take the credit. Section 16 doesn't say so. When section 16 doesn't say so, how can a rule say so? Because friends, as we have all learnt, rule cannot override the provisions of Act. Act tells supplier should pay the taxes. Rule tells supplier should file GSTR 1. Is there any such condition in Act which tells that supplier should file GSTR 1, only then the recipient can take the credit? No. Section says supplier should pay the taxes. Let the portal be efficient. Let the portal tell whether the supplier has paid the taxes or not. I will comply with the section then. Until then, just because a rule is telling and section doesn't tell, I will not follow the rule. This was the challenge which was made before the courts. So therefore, what was the issue before the government? The issue before the government was, there was a provision which stated that ITC can be taken only if it is appearing in GSTR 2A or 2B, as the case may be. But it was this particular provision, this particular rule was not backed by the Act. The Act did not contain any such provision. So therefore, this amendment, now there is an amendment in the Act itself which states that only if the supplier would file his GSTR 1 and it would appear, it would be communicated to the recipient, only then the recipient can take the credit. So what is being done by this amendment? 36 sub rule 4 has now got a statutory backing. Let's have a look at 16(2)AA, a new clause which has been inserted. The details of the invoices or the debit note which is referred to in clause A. What was clause A? 16(2)A, the first condition, invoice, the document should have been available with the recipient for him to take the credit. So the recipient should receive the invoice. So that invoice, the recipient should receive it. That invoice should be uploaded by the supplier in his 1. It should be communicated to the recipient in his 2A. Only then credit can be taken. 16(2)AA. Let's have a look. The details of the invoice or the debit note which is referred to it in clause A has been furnished by the supplier in the statement of outward supplies, and such details have been communicated to the recipient. Only then this credit can be taken. So now friends, 36 sub rule 4. Friends, if you could recollect, credit can be taken to the extent of, prior to amendment, to the extent of 105% of eligible credits which is appearing in GSTR 2B. Now that 105% has been gone, it is now 100%. That extra cushion of 5% which was available is now no longer available. Why no longer available? Because now this 36 sub rule 4 is under which provision? It is under the statutory backing of 16(2)AA. 16(2)AA doesn't give any leverage of 5% or extra 10%. No extra leverage which is being given. It simply tells you credit can be taken only if the supplier is filing the details of his outward supplies and communicated to the recipient. No extra leverage given. So friends, what is the amendment? Amendment is 36 sub rule 4 is being given a statutory backing. 16(2)AA, nothing new. As far as the conclusion is concerned, it is nothing new. Earlier the provision was there in 36 sub rule 4. It was there in rule, now it is there in Act. No new provision has been introduced. Only statutory backing has been given. But what is the change? The change is, earlier it was 105%. of eligible credits appearing in 2B, now it is 100%. Means nothing extra would be available. So friends, no input tax credit shall be availed by a registered person in respect of invoice or debit notes, the details of which are required to be furnished under 37 subsection 1 unless the details of such invoices or debit notes have been furnished by the supplier in his GSTR 1 or using the invoice furnishing facility, and the details of such invoices or debit notes have been communicated to the registered person in form GSTR 2B. This debate of whether it is GSTR 2A or 2B is also closed. Only if the supplier is filing his details of outward supplies and including that particular invoice based on which the recipient wants to take the credit, only if the supplier is filing his details of outward supplies by the due date, only then the recipient would be in a position to take the credit for that particular month. If he is filing later, credit is not disallowed to you. You cannot take it in that month. You also take it in next month. This is the provision which has been introduced. So friends, let's take an example. For October 2022, 100 invoices the recipient is having, total ITC amount is 10 lakhs. Now the details which are further given, 80 invoices involving ITC of rupees 6 lakhs is filed by the respective suppliers by 10th of November. Filed within due date? Yes. When can the credit be taken? It can be taken while filing the GSTR 3B for the month of October. When he is going to file it, let's suppose by 20th of November, for the month of October, this credit of 6 lakhs can be taken because details has been uploaded by the suppliers in their GSTR 1 and uploaded by the due date appearing in GSTR 2B also. 15 invoices involving ITC of rupees 1 lakh is by 15th of November, which means it is filed after the due date. For the month of October, filed on 15th of November after the due date. Credit cannot be taken for the month of October because this will not appear in GSTR 2B of October. This would appear in GSTR 2B of November. So credit can be taken of this 1 lakh rupees only in the month of November month GSTR 3B. 5 invoices involving ITC of 3 lakh is not filed at all. Credit cannot be taken at all. As and when, if at all, it is filed in future but before the last date for availment of input tax credit, as and when it is being filed, credit can be taken. So this is 16(2)AA read along with 36 sub rule 4. Friends, as far as the provision is concerned, conclusively there is no change at all. One which was there in rule has been brought into act. What are the points to be mentioned? Earlier it was 105% of eligible credits appearing in GSTR 2B. Now it is 100%. The next thing is whether it is 2A or 2B. Rule clearly now sets out it is GSTR 2B. Only the supplier is filing by due date, the recipient would be in a position to take the credit for that particular tax period. The next amendment is in invoicing. Now friends, the limit was any registered person whose aggregate turnover in any preceding financial year from 17-18 onwards, if it crossed 50 crore rupees, invoicing was mandatory. Now friends, that 50 crore rupees has been amended and now it stands at 20 crore rupees. So friends, any registered person whose aggregate turnover in any preceding financial year from 17-18 onwards, if it has exceeded 20 crore rupees, invoicing provisions are applicable for that particular person, which means that for any B2B supplies or exports which are being made by that particular registered person, he has to raise an invoice only after generating an IRN number from the e-invoicing portal. The next concept in Rule 86A, friends, as far as Rule 86A is concerned, if the proper officer has got reasons to believe that input tax credit has been taken fraudulently or ineligible input tax credit has been taken, then the proper officer can block the input tax credit from being utilized. That means once is going to block this credit in the electronic credit ledger, that particular credit cannot be utilized, nor a refund of that particular credit can be taken. Now friends, the question is, who is that particular proper officer who can block this credit? So friends, these particular officers have been decided according to the quantum of the issue. If the total amount of ineligible ITC or fraudulent ITC, if it is not exceeding rupees 1 crore, which means if it is up to rupees 1 crore, then it is going to be Deputy Commissioner or the Assistant Commissioner. This is in the administrative wing. In case of investigative wing, the rank remains the same, only the nomenclature changes. It is the deputy director or the assistant director. If it is above 1 crore but not exceeding rupees 5 crore, it is going to be additional commissioner or joint commissioner. Investigative wing, additional director or joint director. If it is above rupees 5 crore, it is going to be principal commissioner or commissioner. Here it is going to be principal additional director general of DGGI or additional director general. So friends, these are the slabs, these are the quantums, and based on the quantum, these are the designated officers who can block the input tax credit under rule number 86A. The next change, friends, in return filing. Now friends, GST is a compliance based law. The government is focusing more and more on compliance. The government is designing the law in such a manner that a registered person is forced to comply with the law, is forced to file his returns, and is forced to file his returns on time. Let's take an example, friends. If I am a supplier, I do not file my GSTR 1 within the due date, it would not auto-populate in your GSTR 2B, assuming you are my recipient. It would not auto-populate in your GSTR 2B. You cannot take credit for this particular month. Therefore, I am going to lose business. So, you are going to follow me up. You are going to be constantly behind me to ensure that I file my GSTR 1 by due date. Agreed. I file my GSTR 1 by due date, you get the credit. But the government doesn't get the taxes because taxes do not go through GSTR 1. Taxes go through GSTR 3B. So what is the benefit which the government is getting out of it? Now friends, recipient wants an entry in 2B for which I have to file GSTR 1. The government wants taxes through GSTR 3B. So now the government creates a trap wherein it says, if I want to file my GSTR 1, I should have filed my GSTR 3B of the preceding months. Without filing GSTR 3B of the preceding months, if I have not filed my GSTR 3B for the preceding tax period, I cannot file GSTR 1 for the current tax period, which means my recipient cannot take credit. So friends, I cannot have any return which is pending, because if my 3B of the preceding tax period is pending, I cannot file my 1 for the current period. If I cannot file 1 for the current period, you cannot get the credit. If you cannot get the credit, I do not get the business. So indirect pressure is being created. So friends, what is the amendment? The amendment is, a registered person could either be under QRMP scheme or he could be under the regular scheme. If a registered person is under the regular scheme, here it says, prior to the amendment, if I have not filed GSTR 3B for the preceding 2 tax periods, I will not be able to file my GSTR 1 for the current tax period. This is prior to the amendment. Post amendment, if I have not filed my GSTR 3B for preceding 1 tax period, I would not be in a position to file my GSTR 1. So friends, the change is only in the regular scheme. For QRMP scheme, earlier it was if I did not file my GSTR 3B for 1 preceding tax period, which was 1 quarter, I would not be in a position to file either GSTR 1 or IFF. That remains the same. The only change is, as far as regular persons was concerned, generally it was preceding 2 tax periods. If rule 86B was applicable, it is 1 tax period. Now friends, anyone it is, if I am under regular scheme, if I have not filed my GSTR 3B for preceding 1 tax period, I cannot file my GSTR 1 for the current tax period. Let's have a look. Notwithstanding anything contained in this rule, a registered person shall not be allowed to furnish the details of outward supplies in GSTR 1 if he has not furnished the return in 3B for preceding month. So only 1 tax period. Earlier it was 2 months. And in case of rule 86B, it was 1 month. Now whether it is 86B is applicable, not applicable, doesn't matter. Regular person, preceding 1 month 3B not filed, current month GSTR 1 cannot be filed. If a registered person required to furnish return for every quarter under the proviso to 39 subsection 1, the QRMP scheme, shall not be allowed to furnish the details of outward supplies in GSTR 1 or through IFF if he has not furnished the return in 3B for preceding tax period, which means preceding 1 quarter. Here there is no change, the change is over here. So friends, if a person is there under regular scheme, if he has not filed 3B for March, GSTR 1 for April, he would not be in a position to file it. if he is under QRMP scheme, not filed for the quarter Jan to March, if he has not filed GST at 3B for the quarter Jan to March, he would not be in a position to file his IFF for the month of April. The next change in exemptions. Now friends, just to recollect, first what was there prior to change? Now friends, transportation of passengers in stage carriage, if it is non-AC, it was exempted. Contract carriage, if it was metered cabs or auto rickshaws, it was exempted. If it was other than meter cabs or auto rickshaws, other than radio taxis, in those cases, and if it was non-air conditioning, and that too if it should be not for tourism, not for conducted tour, not for charter or hire, then it was exempted. Now friends, there is a change in these three exemptions which are there. There is a change in these three exemptions. Now what is the change? Now friends, as we know, passenger transportation services could also be provided through an electronic commerce operator. And if these passenger transportation services are provided through an electronic commerce operator, the ECO has to pay taxes under 9 subsection 5. So friends, the change is, if these three services which were earlier exempted, which means stage carriage, non-AC, metered cabs or auto rickshaws in case of contract carriage, in case of contract carriage, the residual category, which means other than metered cabs or auto rickshaws, other than radio taxi, the residual category, if it was not for tourism, not for conducted tour, not for charter or hire, and if it was non-AC, it was exempted. Now friends, here there is a slight change. The change is, if it is provided through an ECO, it is taxable, otherwise it is exempted. These three services, if it is provided through an ECO, it is taxable, otherwise it is exempted. So friends, if it is through an ECO, it is taxable. Who is going to pay taxes? The taxes are supposed to be paid by the ECO under 9 subsection 5. The next change in exemptions, friends, any services which is provided to the government, pure services where goods component is not involved, or those services where goods component is involved but which is not exceeding 25% of the total value of contract. If these services were provided to the government, local authority, governmental authority, government entity, were exempted. Now friends, the scope of these exemption has been narrowed down. Narrowed down in sense, pure services, if they are provided to government or local authority, are exempted. Pure services, which services? Those services wherein which are provided to government or local authority by way of any activity in relation to any function which is entrusted to a panchayat or a municipality under Article 243G or 243W of the Constitution. Those services, if it was given to a government, local authority, governmental authority or government entity, was exempted. However, this exemption has now been trimmed down, the scope has been narrowed down. Governmental authority and government entity is removed, which means that pure services of this kind, if they are given to a governmental authority or a government entity, would be taxable. Now friends, if it is not a pure services, if it is a composite supply of goods and services wherein the value of the goods is not more than 25%, of course by way of any activity in relation to a function entrusted to a panchayat or a municipality under 243G or W of the Constitution, these services also, if it is given to a governmental authority or a government entity, earlier it was exempted, now is not exempted. So friends, the scope has been narrowed down. Services provided to government authority and entity, these type of services which were earlier exempted, now they are going to be taxable. So friends, we have come to an end of this discussion. Very few amendments were there. I hope you had enjoyed it. If you had any queries or any suggestions, you can please write to me over here. I wish you all the very best for your examinations.
Subscribe to LearnCab and hit the bell icon to get notified.